right, how are you guys? Calvin Russell here, managing broker of Park Place Realty Group, LLC. Today we're going to talk about first off, what is a VA loan and how to qualify for it, all right? So I'm going to go ahead and refresh my screen. That way, if any questions pop up, I can get those questions answered. Sometimes y'all be too afraid to ask questions and then y'all jump into the DM, y'all text me, y'all email me. It's all good. Either way is fine, but I always want to make sure I check it just in case you bold enough to ask me some questions while we going live, all right? So let me go ahead and get that ready here. Okay, cool. All right, guys, let's do it. So number one, let's go into the first thing. Well, I'm just going to type up here. I'm going to write up here. That is too close. That is too close. All right. So VA loans. Okay. So number one. All right. What is a VA loan? So a VA loan is a mortgage loan essentially that's been provided by the Veterans Administration. Okay. And essentially you have to be not currently in the military, but you essentially have to have done time in the military, have made the commitment that you have in the time that you have. And of course, that's when you will go ahead and qualify for it. To make sure that you qualify for it, you can always call the VA yourself just to find that out. It's called a certificate of eligibility. Also, your lender is going to double check that anyway, just to make sure that you meet all of the qualifications. If you find that you have spent time in the military and for whatever reason you don't qualify, or there was an dishonorable discharge, then of course you'll find out why. But usually the most common reason is people made the commitment for whatever the time frame was going to be, and then they didn't finish the time, or something happened that shouldn't have happened. Okay, and we get it. We're not faulting you for that, but most people, of course, you end up qualifying for that. That's just being eligible for that particular benefit, okay? Just because you are eligible does not mean that you're going to qualify, okay? So let's go into talking about, how to qualify, all right? So we already answered number one, what is a VA loan, okay? So you guys got that. So now, number two, we're going to go into how to qualify, okay? So now, essentially, the qualifications that is the same as an FHA loan, okay? So it's really going to depend on what type of lender you go with. Now, just because you're getting a VA loan does not mean you have to do it with, a military bank. So it doesn't have to be with USAA. It doesn't have to be with Navy Federal. So I'm not saying that they're bad banks. It's just most lenders do VA loans. You can pretty much get one anywhere. It's more so the customer service that you're going to get. Now, also what's going to play a role is the credit score that you need to actually qualify for it, as I mentioned. So now some lenders will go as low as 580, some will go as low as 590, but keep in mind, you still must be able to get through the AUS, okay? So now, what is the AUS? The AUS is the automated underwriting system, okay? So essentially, this system, pretty much all the lenders pretty much have this same system, but a lot of times, certain things may not be entered in correctly, or you may not have given all the documents. So you may be a 580, middle mortgage score on your FICO, and you say, all right, I want to go ahead and start the process for a VA loan. Once they put you through the AUS, even though you may meet the lender's qualification for credit score and you may be eligible through the VA, does not guarantee that you will pass everything or be approved through the automated underwriting system. So usually when the scores are 620 and above, the process is a little bit easier, but can you do it under 620? You most definitely can, okay? So I always say, rule of thumb is to, try where you are right now, and then, of course, if assume that the score is not where you need it to be, and then, of course, just try again, obviously, once the score goes up. If you need help getting the credit score up, we might just know a company, 850 Club Credit Consultation. So either way, so that's that process there, and as I mentioned, the scores that you need can vary anywhere between 580 to 620. And again, guys, this is the minimum, okay? So obviously, if you're over these numbers, then you'll be just fine. But you really want to spend time in that 620 range, just because the process is going to be a lot easier. Okay. Now let's talk about what you can. First off, why even people want the VA loan? Clearly, because number three, it should have been number one, is because it's 0 down. Okay. So now, that just means that you don't have to have a down payment. You still have other things you have to pay for. So what are some things you have to pay for? Let's go through the list, and I'll go ahead and make a little list here. So number one is going to be your earnest money, okay? So earnest money, let me hold this thing. So earnest money is usually 1% of the agreed purchase price, okay? So for example, if the purchase price is, let's say, $250,000, it's a nice consideration to give 1% as earnest money, which is $2,500. Normally you see about $1,000 in most case scenarios, but in this market, you need to show that you're a strong buyer, okay? Especially if you got the funds, for the earnest money. So that's number one. Number two is going to be your inspection. Okay, so now this inspection, that can range for a lot of different prices. Some inspectors charge $300, some charge based on what type of property it is, some charge based on how much square footage it is. It just really all depends, on what type of inspector you're going to go with, okay? So make sure, don't just go with the cheapest one that you find. Not saying that the cheap one's going to be good, but paying less doesn't necessarily mean that it's going to be top-notch service. You want to make sure that the report is right. You want to make sure that they're not missing anything. Granted, there's no crystal ball to tell what's going to happen, in the future, but there are signs that, hey, things are wear and tear, things are deteriorating, this is going to need this, and whatever the case may be. But just make sure you know that you will have to pay for an inspection. Now, earnest money is going to be due within 2 days, of going under contract. So finding a home, giving the numbers, making an offer, the seller says blah, 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 you say blah, 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 you guys come to an agreement, whatever, and then that's where earnest money is going to come in. Inspection money is going to come in usually within 5 days, around that time frame too. And then you have number three is going to be your appraisal. Okay, now let's talk about the appraisal for a second. So now with the appraisal, depending on what type of lender you go with, some appraisers want the money up front, some will pay for it in the beginning, and then assuming that you close, but if you don't close, you got to pay them, and then some just pay for it. So again, there's different lenders out there, so that's just kind of based on what I've been seeing. But most of the lenders that I've been working with as of recently, you pay for it right up front, okay? And that appraisal can range, I've seen anywhere between $300 to $500, maybe a little bit more, just really depends. But here's the catch, is that now VA is treated pretty much like an FHA loan, okay? And the reason why is because they look at a lot of things that are safety oriented. So peel and paint, making sure that obviously if there's a furnace, making sure that the furnace is working. AC is more of a luxury, believe it or not, but in Chicago, you better believe that furnace better be cracking, okay? So, but they really want to make sure that everything is safe. Just making sure that everything is safe and sound, okay? And then, last but not least, now this is something that you cannot pay for, or that that you're not supposed to be paying for, and this is a termite inspection. Now, there are some inspectors, they'll throw that in at no charge. There are some companies that will charge you about $100. I think the going rate is probably about $100 for a termite inspection, okay? And so essentially, again, safety, they want to make sure that there aren't termites eating up your property, okay? I have sold properties that had past termite damage, and then the remediation, that's how, thousands of dollars, okay? Usually the sellers will cover that. Obviously, now that they know about it, because you have a professional company, the seller's supposed to know. At that point, even if they declined it, now they know the house got, or had past termite damage. Either way, they're going to make sure you have that termite inspection, all right? Now let's talk about what type of properties you can go into. Okay. Matter of fact, now let me go back into this real quick. So we're going to go number 5. Number 5, we'll go into what type of properties you can get. But number 4, we're going to go into how to make these numbers work. Okay. So now the reason why I'm sitting on this side of the camera is not because the Park Place Monopoly sign is there. It is, honestly. But either way. So now that's just the down payment. You still have your closing costs, okay? So paying your attorney, paying your 1 year of insurance, paying your 1 year of taxes, paying the title fees, and nobody ever knows what the hell those numbers are. No, I'm kidding, I have an idea, but either way, that's going to come into play. So now, if the deal is structured right, sometimes you can get seller credit, okay? So I'm going to put in here closing costs. But I won't lie, usually when I have a VA loan, we try our best to get all those numbers covered from the seller. And you can kind of move numbers around. Of course, if you're working with Park Place, we're going to do everything possible to make that happen for you. But you can't guarantee anything. You can't make a seller do something, right? But at the same time, there are ways to kind of finesse, to kind of do certain things. Everything is not, what I've learned as a certified negotiation expert, I've learned that everything is not always based on price. So there are ways to kind of get something for something else and then, finesse your way into getting all of your closing costs taken care of, whereas you've only come out of pocket for your earnest money, your inspection, and your appraisal, okay? So that's pretty good, and it's most definitely possible. So that's your closing costs there. But again, I'm going to put in here, seller can pay, okay? But they don't have to guarantee it, okay? You can't guarantee, you can't bank on that happening. Now let's go into the type of properties that you can get while going into a VA loan, okay? So the type of properties that you can get, you can actually go up to 4 units, okay? So I'm gonna go up to 4 units, okay? So of course you can go into a single family home, 2 unit, 3 unit, 4 unit, but just because you qualify for the VA loan, just because you had a score for the VA loan, just because you get 0 down on the VA loan, whether or not you get the closing costs and whether you have it in your savings or whether the seller pays for it, does not mean that there aren't any property limits, okay? And you still have to make sure that there's money in here. This is what we call reserves. So usually when you go into a 3 or 4 unit, you're going to have reserves. Okay, reserves equal, a reserve is a monthly mortgage payment. Okay, so a monthly mortgage. Okay, so let's say, for example, you see this nice 3 unit property. You meet all the qualifications. Monthly payment is, let's keep the numbers easy. Let's just say monthly payment is, let's say $3,000. Okay, so $3,000 for 1 month. Okay, and most banks, they want to see 3 to 6 months of reserves in your account. So 3 times 3, they want to see $9,000 plus the closing costs, assuming that the seller did not cover those closing costs, okay? In some cases, they may want to see 6 months of reserves. So that would be 3 times 6 in your account at minimum when you start talking 3 or 4 unit. Calvin, why do they want to see so much money in my account? Well, so much money is relative, because some people, hey, they got it, and some people say, hey, I need some time to get it, all right? So, but either way, once you have that amount of money, let me answer the question. So why do you need that? Well, just a perfect example is COVID, right? People wanting to work but not being able to work, okay? And because of that, now you got people that can't necessarily pay rent because they can't go to work, right? And so now the bank says, hey, we don't care who can't pay, can you pay? And then they already know you can pay because before they approved the loan, they knew you had 3 to 6 months to get your stuff together and, or decide if you're going to keep that person, kick that person out, get them evicted. We knew you had the money saved for that situation because it's essentially you banking on a lot of people to have their money ready at the end of the month. You guys ever tried to go to like a party, or you guys ever tried to plan something with people and then something always, I won't say go left, but somebody ain't ready or somebody ain't got their stuff together? Yeah, that's what that is, So they want to make sure, hey, listen, we know you good and we know you can cover it regardless of you waiting on your people. Make sense? Let's move on. So now, you can go up to 4 units. Now, why is it a 4 unit max, okay? Why can't you go 5 units? Well, 5 units or more is typically commercial, okay? And so when you start seeing commercial, not only is it a bigger down payment, but you most definitely, this is not a residential situation. That's another thing. Let's talk about that. It must be, in most cases, all right, well, let me just say how it's supposed to be. It's supposed to be owner occupied, okay? Owner occupied. I'm not going to go into that, but just know it's supposed to be owner occupied. All right. So now let's go into things that make sense, because you have things where a person is not trying to finesse the system, but you get natural life occurrences. Let's say a young lady has a VA loan. She has the loan. She meets all the requirements, all that fun stuff. She buys the property. She lives in the property. She meets a guy. Guy says, hey, let's move in. Let's get married. She keeps the property. What did she do wrong? She did nothing wrong. She lived life, right? So the bank is not going to come knocking at the door saying, hey, it's such and such. Does she live here? Because that's a perfect scenario, okay? That makes sense, all right? So that's just throwing some stuff out there. So that's 4 units. Now, let's talk about, it used to be a price point or a loan amount, a max loan amount, and that old loan amount, let's go into this. This is old, but the reason why I'm doing this is because some people, they probably tried to get a VA loan in the past or got approved for it, but there was an old loan amount, and the old max was, I believe it was 400K. Is it a 400K or is 450K? Okay, so it's either 400K or 450K. Either way, that no longer exists. Keyword old. There is no more max, on the VA loan. Now, granted, it's got to make sense. So you still have DTI, okay? So which means your debt to income. They still want to make sure that you can cover, the monthly payment, because again, this is your loan. You have to be able to pay, the mortgage every single month. So again, you guys are probably like, man, I don't even need 400,000. Well, just throwing that out there, So, but if your income can handle whatever that payment is for, a $400,000 house. Obviously, taxes play a role, and association, all that type of stuff, depending on what type of property you got, So, but that's the basis of qualifying for a VA loan. So I don't see any questions, but I'm always knowing how it goes. I end the video and then my DMs start popping, right? It's all good, So I just want to make sure you guys get the right information. And the reason why I brought this up, because do you know how many people how many people meet all of the criteria except one piece? And that is what normally gets a lot of people, guys, and that is the credit score. So, of course, if the credit score is not there, do not let your credit score hold you back from putting 0 down on a home. Please don't let that happen, okay? And again, we have a plan for you at 850 Club. All you have to do is give us a call. Let us know that you're trying to go into home ownership. We'll let you know what options you have and how our services can help you. But you know how many people have access to all of this, literally can buy a house that they see across the street if they wanted to, but they don't have the credit score. Don't let your credit score hold you back. Or some of you guys may be like, well, Calvin, credit's fine. I don't know where to start. That's easy. We most definitely know where you need to start. And the first thing to do is reach out to anyone on the Park Place team. You can reach out to me or many of our successful agents. We're here to help you. Let's make it happen. And I will see you guys on the next video. Have a good day.